Every single country on Earth is drowning in trillions of dollars of debt. The United States alone owes over $35 trillion. China, Japan, the Eurozone, none are spared. But hear us the mystery that keeps economists up at night and should make you question everything you know about money. If everyone is in debt, who exactly is the creditor? Who profits when nations and everyday people like you and me are trapped in this endless cycle of borrowing just to stay afloat? Today, we're diving deep into the global debt trap, a system designed not to liberate, but to enslave. By the end of this video, you'll see how a handful of elites have turned your poverty into their empire. But stick around, because the twists in this story will challenge everything you thought was real about the world economy. To understand this trap, we need to set the stage with the hidden history of money and debt. Debt isn't new. It's as old as civilization itself. In ancient Mesopotamia around 3000 BC, farmers borrowed grain from temples, repaying with interest from future harvests. Fast forward to the Roman Empire, where emperors like Julius Caesar amassed public debt to fund wars and public works, often leading to inflation and economic collapse. But the real game changer came in the 17th century with the birth of modern central banking. Picture Sweden in 1668. The world's first central bank, the Riksbank, is established. It wasn't created to serve the people, but to manage the king's debts from endless wars. Soon, England followed in 1694 with the Bank of England, founded by a group of wealthy merchants who lent money to the crown in exchange for monopoly rights to issue banknotes. This was the seed of a system where private interests controlled public money. In the United States, Alexander Hamilton pushed for a national bank in 1791. Arguing it would stabilize the young nation's finances after the Revolutionary War. But critics like Thomas Jefferson saw it as a tool for elite control, warning that it would concentrate power in the hands of bankers. These central banks introduced fractional reserve banking, a magic trick where banks lend out more money than they actually hold in reserves. If you deposit $100, the bank might keep $10 and lend out $90, creating money out of thin air. Multiply this across the globe, and you have the foundation of exponential debt growth. Teasing the twists ahead. What if I told you this system isn't an accident, but a deliberate design? As we trace its origins, rise, and inevitable breaking points, you'll see how cause leads to effect, trapping billions in poverty while a select few reap unimaginable profits. Let's start at the origins of the modern global debt trap. The 19th century saw the rise of international banking families like the Rothschilds, who financed wars across Europe. Nathan Rothschild famously profited from the Battle of Waterloo in 1815 by using insider information to manipulate the London stock market. But the true origins of today's system lie in the aftermath of World War I. The Treaty of Versailles in 1919 saddled Germany with crippling reparations, 132 billion gold marks, equivalent to about $442 billion today. This debt wasn't just punitive. It was a chain reaction waiting to happen. Enter the cause: hyperinflation in Weimar Germany. To pay debts, the government printed money relentlessly, leading to wheelbarrows of cash for a loaf of bread by 1923. The effect? Economic despair that paved the way for political extremism. Meanwhile, across the Atlantic, the Federal Reserve, established in 1913 as America's central bank, fueled a stock market boom in the 1920s through loose credit policies. Banks lent money for stock speculation, creating a bubble built on debt. This wasn't random. It was the elite bankers extending their reach, profiting from interest while the masses borrowed to chase dreams of wealth. But why delay the answer to who benefits? Because understanding the full chain reveals the conspiracy. These origins set a pattern. Governments borrow from central banks, often privately influenced, to fund wars or growth, passing the bill to citizens through taxes and inflation. The elites? They collect interest, gaining control over policy and resources. From these origins, the debt trap rose like a phoenix after World War II. The Bretton Woods Conference in 1944 created the International Monetary Fund, IMF, and World Bank, ostensibly to stabilize global finances. But here's the twist. These institutions, dominated by Western powers, loan money to war-torn nations and developing countries, often with strings-attached structural adjustments that forced privatization and austerity. Cause? Massive reconstruction loans? The U.S. Marshall Plan pumped $13 billion, over $150 billion today, into Europe, but it also tied recipients to American economic influence. Effect: a surge in global debt as countries borrowed to industrialize. By the 1970s, oil shocks hit and petrodollars flooded banks. Elites like David Rockefeller's Chase Manhattan recycled these funds as loans to Latin America and Africa, charging high interest. The rise peaked in the 1980s with the Third World Debt Crisis. Countries like Mexico defaulted in 1982 after interest rates spiked, thanks to U.S. Federal Reserve Chair Paul Volcker's anti-inflation policies. Banks had lent recklessly, knowing governments would bail them out. The elites profited handsomely. Interest payments alone transferred wealth from poor nations to rich bankers. By 1990, developing countries owed $1.3 trillion, much of it odious debt from corrupt regimes. Central banks amplified this. Through quantitative easing precursors, they kept interest rates low, encouraging more borrowing. The pattern? Debt creates dependency, and dependency ensures elite control over resources like oil, minerals, and labor. Every rise has a breaking point, and the global debt trap shattered in 2008. Cause: decades of deregulated banking, starting with the repeal of Glass-Steagall in 1999, allowed banks to gamble with deposits. Subprime mortgages ballooned into a $14 trillion housing bubble. When it burst, the effect was global contagion. Lehman Brothers collapsed, credit froze, and economies tanked. But who paid? Not the elites. Governments bailed out banks with trillions in public money, socializing losses while privatizing profits. In the U.S., the $700 billion TARP program saved Wall Street, but Main Street suffered foreclosures and job losses. Globally, debt soared as nations borrowed to stimulate recovery. The IMF imposed harsh austerity on Greece, Ireland, and others, leading to social unrest. The mystery deepens. Why did central banks like the Fed create money to buy toxic assets? Because the system is rigged. The Fed is privately owned by member banks, profiting from the interest on government bonds. In 2008, elites like Goldman Sachs alumni in treasury positions ensured their firms thrived while poverty spiked. The fallout from these breaking points is a world fractured by inequality. Post-2008, global debt exploded from $142 trillion in 2007 to over $338 trillion by mid-2025, according to the Institute of International Finance. That's more than 235% of global GDP per IMF data. Cause: endless quantitative easing, central banks printing money to buy bonds, inflating asset prices for the rich. Effect: the top 1% captured 95% of post-crisis wealth gains while wages stagnated. In developing nations, debt service eats 20 to 30% of budgets, starving education and health. Elites profit through mechanisms like buy, borrow, die, borrowing against appreciating assets at low rates, deducting interest taxes, and passing wealth tax-free. Banks earn trillions in interest. In 2023 alone, U.S. banks made $1.2 trillion in profits. The human cost? Billions in poverty, as debt traps individuals to student loans, credit cards designed to keep you paying forever. Attempts to fix this have only deepened the trap. Post-2008 reforms like Dodd-Frank promised oversight but left loopholes. The IMF's debt relief initiatives, like HIPC in the 1990s, forgave some debt but imposed neoliberal policies that increased inequality. Cause: reliance on more debt to solve debt. Quantitative easing since 2009 added $10 trillion to central bank balance sheets, but it fueled bubbles in stocks and crypto. Effect: failed fixes like negative interest rates in Europe distorted markets, benefiting speculators. Even crypto and blockchain were touted as escapes, but elites co-opted them. Central bank digital currencies, CBDCs, now loom as tools for total control. The pattern repeats. Fixes serve the system, not the people. Now connect this history to today. In 2025, global debt hits $338 trillion, with $21 trillion added in the first half alone. Shocking data. The U.S. debt-to-GDP ratio exceeds 120%, Japan's 256%. Repeating patterns? Just like the 1920s boom led to 1929's crash, today's AI and tech bubbles, fueled by cheap debt, echo 2008. Elites profit as before. Private equity firms like Blackstone borrow cheaply to buy companies, strip assets, and leave debt-laden shells. Governments borrow from central banks, paying interest that flows to shareholders, often the same elites. In Africa, Chinese debt trap diplomacy mirrors colonial loans, securing ports and mines. The paradox: debt promises growth, but delivers stagnation for most, while elites' wealth compounds. So, what are the three clear takeaways from this global debt trap? First, debt is a tool of control. From ancient temples to modern central banks, it's designed to transfer wealth upward, keeping the masses in perpetual poverty. Second, elites profit through interest, bailouts, and asset inflation. They borrow to invest, deduct taxes, and die rich while you pay the bill. Third, the system repeats because we ignore history. Crises aren't accidents. They're opportunities for more consolidation. A warning: if we don't demand transparency in central banking and debt forgiveness for odious loans, the next breaking point could collapse the fiat system entirely, leading to hyperinflation or authoritarian control via CBDCs. Or is that the plan? If this video opened your eyes, hit like, subscribe, and turn on notifications for more exposures on financial conspiracies. Share your thoughts in the comments. Who do you think really owns the debt? And check out our playlist on economic paradoxes for deeper dives. Knowledge is power. Don't let the trap claim you.